The end of the financial year is looming, but don't panic. There is still time for you to get on top of your end of financial year responsibilities. There really is. Fortunately, Tom Crow of Crow Financial joins us this morning to talk about it. Good morning, Tom.
Good morning.
Welcome back. And
it's great to be here.
Well, you know, we're heading into that holiday season and the end of the year. And so how can we reconcile our year-end personal finances as we look at this information that we have and we get overwhelmed? What do we do?
Well, there's not a lot of things that are super time sensitive.
Okay.
Just a couple. I hope everybody's working on their budgets and that you're going to look at the end of the year and see if maybe you're a little ahead, a little behind, what kind of adjustments you need to make in terms of the debt, the savings, all that kind of stuff. Hope you didn't go too far into debt yet for Christmas.
Layaway.
You know, don't start off the beginning of the year deep in the hole. Layaway is better than sticking it on a charge card and carrying it over. One of the big investment things, maybe if you got gains or losses to be reconciled with, you know, work with your accountant, your financial professional, so you don't get stuck with a big tax bill if you don't have to. And charitable gifts. Those are time sensitive. If you're going to try and get it on this year's taxes, it has to be done by December 31st.
And this is a great time. I mean, we're going to be talking about Toys for Tots later on.
Mayflower
having, there's so many opportunities for you to do charitable things and get those receipts.
Yes, get the receipts and get it all done before the 31st if you want it on this year.
That's the way to do it. Now, there are a lot of people out there who have left the job or they've been laid off. And so in that case, should we keep money just sitting in a former employee's 401k or do we actually just move it? What's the plan on that?
I always recommend moving it.
You do?
I think when you leave an employer, a lot of the plans are a little more restrictive. If you get it out into an IRA account, a traditional IRA, first of all, there shouldn't be any taxes or penalties or fees to do that. And you have a lot more control in your investment options outside the 401k in most cases. I'm
curious about that process because, I mean, if you're coming from another job, you have money in that 401k. Let's say now you get a new job, you have a new 401k with a totally different financial affiliation. Do you move what you had in that 401k over to the new one? Can you do that?
It depends on the plan. Some plans are flexible enough to allow that.
They are, okay.
If they're not, get it out of there and get it into an IRA.
Okay, that's a great way to do it. And let's talk about the investments in general because a lot of people making investments. Should we expect you to help us? I mean, what can we expect from our financial advisor when it comes to investments?
It depends on the advisor. You know, you get what you pay for.
That's true.
The onus is on you to know what the advisor is doing and how they're getting paid. If you work with somebody like me who's a fee-based advisor, you expect somebody to pay attention to your portfolio all the time. Keeping an eye on things. If you're going to work with a broker who's just a transactional relationship, really the only time you're going to talk to him is when you're doing a buy or a sell.
That's it.
If you've done something like buy an annuity and you just have a fixed income, that's kind of a one-shot deal. You purchase the product, the income generation starts, and you really don't have anything else to do with the advisor.
And that's it.
Yeah.
Well, you know, I've always left my 401k advice to the experts because I really don't know what to do. So how involved should we get in our own portfolio?
It's a personal preference again. We talk a lot about risk. And, you know, I'm of the opinion that the riskiest thing you can do is buy something and forget about it. So just never, ever pay attention to it again because you're leaving too much up to forces outside your control, and if you ignore it, you're asking for things to go wrong.
That's a good point. I mean, I think myself included, I know a lot of people get very intimidated by investments and things like that, and they just put it aside because it's just too much, and they figure it'll all work itself out. Or I'll have somebody else.
Every person has a place in between looking at it every minute to looking at it once a year where they're comfortable. Well, that'll just drive you crazy.
Well, okay, so let's say I want to get more involved in my own portfolio. How do I learn more about investing? How do I learn more about it?
There are a lot of great sources. My personal preference is that you go to focusonthefuture.tv and look at some of our segments there where I host the Stock Market Corner, and I've been a guest a few times talking about investing. In fact, the episode that's going to post the Monday after Thanksgiving is about choosing an investment advisor relationship and knowing what certain people can do for you and what they can't and what to look for.
That's great. I mean, and you do what I like about Focus on the Future, what I really like is that young people, whether you're in college, whether you're in high school, or even just getting started in your new careers, getting out of college, it's a great opportunity for young people to really get started on the right foot so they don't get themselves in trouble as they get to a point where they're older and it's too late to really clear things up, or it's a lot harder.
Right. The deeper in that hole you get, at.
Yes. Well, let's not even go
harder
there.
and harder. That's right. Start off right.
I'm gonna restart off right now that I know you. Now let's visit the world revisit the world markets, because we've talked about that before. So how are they looking as we approach the end of this year?
Well, I think last time I was here, Greece had just about straightened itself out.
Yes, that's what
and it looked like things were okay. We had a nice run up in the markets, and then everything blew up. I think Italy's bonds blew up, Spain's bonds blew up. There's just what's happening is people are concerned about their ability to make good on their debts, so people are dumping their bonds, and their yields are going through the roof, which means to borrow more money they have to pay higher rates, and that gets more expensive. It's kind of a vicious cycle. But you look at Greece, who basically punted. They've replaced the prime minister. Not really sure what's going to happen there. It's just a lot of uncertainty, and at year end, it's not a real good time.
No, I mean, is there a light at the end of the tunnel?
They're saying Euro bonds now are the saving grace of all this, and that that'll kind of distribute the risk between the weaker countries and the stronger countries. The issue, Greece, we talked about 2%.
Yes.
But Spain and Italy combined is about 20% of the EU, so they're big enough to matter.
Well,
and
definitely
a failure there, or even a mild default.
And
it could be a lot more
If we have a financial advisor like you, I mean, will you keep us on top of those things so that we can make better investments and choices based on what's going on around the world?
Yeah, I mean, I have discretion in my clients' portfolios, which means I make the decisions, I make the changes.
Great. Yeah.
And I'm supposed to do what I do based on what I see out there.
Okay. Well, it's good to know that. And analysts are actually saying that credit rating agencies are going to downgrade us, and that's only if the super committee does nothing, right?
Yes.
So now what happens to the markets this week, being a short one? Because we only have really Thursday is pretty much null and void.
Yep.
And Friday's
like a half day. A lot of things are closed.
And even Wednesday's a half day.
Even Wednesday's a half day. Markets are not going to be happy this week.
No.
We've got the uncertainty over the super committee. It looks like they're going to just do nothing.
Okay.
And I think a lot of people are frustrated. It looks like nobody's doing their job. The president's kicked it to Congress. Congress has kicked it to the super committee. Super committee's deadlocked. They're not going to do anything. It's going to go back to Congress. The credit rating agencies are actually worried that nothing's going to happen. These automatic cuts are going to kick in, but they don't kick in until 2013. So there's plenty of time for Congress to come in and circumvent, reorganize, do whatever they want. So they're just seeing that really nothing is being done.
Well, do you see a tax hike in our future anytime soon?
I'm afraid it's inevitable. I think that everybody's concerns are that it'd be nice if they were doing something responsible with it instead of just taking more money.
But it's the reality, and it's likely, so we just have to plan ahead, and as long as we're aware of it, we can make better choices. So let's remind our viewers how they can contact you.
Contact me here in Albuquerque, 243-2281. Go to crowfa.com on the web, and also remember focusonthefuture.tv for those free video segments.
Fantastic. Well, thank you so much as always, Tom, and happy Thanksgiving.
Thank you, Nikki. Happy Thanksgiving.
Good financial clearing the debt is a great way to be thankful.
We try.
We try. And still ahead, you want to help Santa make a child's Christmas morning special? You can do it. Don't go away.